Hey, thanks for joining today or watching. This is Jeff Wright with Fish Creek Capital, presented by Lunchtime Profits. We're going to go through just some financial news and see what's happening this week in the stock market, see what's going on. And then if you wait around, I wanted to also give a quick overview of Texas Instrument. Ticker is TXN. That is a dividend growth company that I've been hearing more about lately just because they do semiconductor chips. And of course, are they part of this AI play or not? But I wanted to look at them from a dividend perspective. So let's first just start with the news. Again, this is live and unedited. Today is Monday, December 1st. I'm going to try to just share my screen some. Also, the market really, let's go ahead and try to share my screen. Make sure this works. Okay, there you should see a chart behind me. This is representing the NASDAQ. This is called a volume profile, and it just measures this far right column over here. That's today, December 1st, Monday, and the blue is just the volume that has traded, and the higher the graph here out on the right means the more volume that's been there. So for today, we this would represent 8:30, and then as we go through the day, you can see the graph builds out, and so does the candles. Those are actually candles that represent times and prices. There, I can make that a little bigger, and you can see it. The market actually opened down. The futures were down pretty good, really, overnight. There was a lot going on with Japan and their bond market, and then also crypto was down a lot. It had a good week last week. It made it back over 90,000. Now it's back under 90,000 and not looking very, very well. That's part of the news today. And once we kind of went down, this was around 8:40. The market opens at 8:30 Central Time. And then we just have kind of been working our way up. But since around 1 o'clock Central Time, we've sold off a little bit here this afternoon. We're still above the 50-day moving average on the daily chart. So I would say at this point, December is looking okay. We backed up in November there, and then last week during Thanksgiving we had a good week, so that was positive. So we'll see where we land. Here is just the CNBC, just to get the real-time look. The Dow is back down. Actually, it was coming up, and so now we're back down 340 points. You can see the numbers there. We have sold off here a little bit. Yeah, so let's see what else is. I'll leave this screen up, and then we can see what else is happening this week. I'm just looking at my notes. Jerome Powell spoke this morning. He had a speech. It was early, 8 o'clock Eastern time, so that's 7 o'clock this morning Central Time, 8 o'clock Eastern. It was around, well, I don't know. I guess I don't really have an update on what that speech represented, but the Fed is ending QT, the conclusion of QT, which would be quantitative tightening, and that can tend to be a bullish sign for stocks, or a dovish pivot. Dovish and bullish would be the same terminology. We've got rate cut odds for the December 17th, 18 FOMC meeting are up to 86%, and we're expecting a 25 basis point cut there. So he was speaking this morning. We're going to get some more economic news this week. That's back on with the government shutdown over. So we've got ADP report. This is for the employment data. The ADP report will be on December 3rd, which is Wednesday, and then the non-farm payrolls will be on December 5th. And we've missed, several of those with the government shutdown. So that'll be back on Wednesday and then Friday. We've got an inflation watch number this week. The PCE price index will be December 5th. And services, ISM, PMI. That's December 3rd. So the services will come first on Wednesday, and then the PCE price index will be Friday. That's the Fed's preferred gauge that they use or look at for inflation. We do have a tech and AI sector pullback. Well, really, NVIDIA kind of has been driving tech. And again, we can see the chart here. We are really kind of backing up. We just dropped a little further on the Qs, which would be tech. And of course, AI Bitcoin is not starting out well this week. So it is back below 90,000. And we can see there was an article on Bloomberg here. I'll pull this up. I like Bloomberg. They've got a lot of good news articles. There's a lot of people leveraged with Bitcoin, a lot of focus on MicroStrategy even, and that stock MSTR is the symbol, but there's a lot of money being lost with Bitcoin right now. So it's showing 84,000, down 7%. Well, that's most of the news. Let's try to keep this moving. So Texas Instrument. Let's look at Texas Instrument for a minute. That stock is TXN. Here's the symbol. We'll just do a little live analysis of Texas Instrument. So it's kind of flat today, down 9 cents. It's $168, 52-week high. It's 221, so it's a little bit off of that. They do have a decent yield right now of 3.38%. Got a PE of 30 for the trailing 12 months on Texas Instruments. So let's look over at their dividend with that 3.3% yield. So Seeking Alpha is a tool that I do like to use. I've already got Texas Instrument pulled up here, especially when it comes to analyzing stocks and looking at them kind of quickly. This is a great website for that. So we've got Texas Instrument has paid a dividend for 36 years. 36 years they've paid a dividend, so that's excellent. They've got dividend growth for the last 20 years. And again, that we like focusing on that because if a company is growing their dividend, that should mean hopefully that they're growing their cash flow, which is what we want, because that means they are increasing payments back to us as owners of the business, as shareholders. So that looks good right here. 36 years of dividend payments, 20 years of growth. But let's look a little further. They've got a dividend safety tab here that's real quick. And man, look, that's bad. Everything is an F. Let's look at their payout ratio. That's going to show what they're using. So man, it's showing 98%. So that is really bad. We would want the payout ratio really to be under 50% for a dividend. Again, because if the company, you want them earning more cash than they're paying out, right? And so the less cash that they're using to pay their dividend when it comes to their gap measure, that is what you want, because that means they're earning a lot more cash than they're paying out, right? So you want a company, a strong company, to pay a dividend. You want them growing that dividend, but you don't want them using all their cash to pay those two things, a dividend and a growing dividend. So that looks really, really bad. Let's look. Let's go to the scorecard. Again, these numbers are good. So that's odd. Here they do have their payout ratio. Again, that is terrible. 98%. They've got a 5-year growth rate of 8% on the dividend. And again, they've got that long history. So there's going to be something going on likely then on why their payout ratio is so high. So another site, fastgraphs.com, you've seen me use it. So I've got Texas Instrument pulled up here. Let's just look. This is going to show us a lot of things. Remember, so on this graph at the top, it's just a historical graph showing the price action of Texas Instrument And really, Texas Instrument is not a cheap stock. Like, the fair value is going to be down here at this orange line. The blue line is going to show their normal price to earnings ratio, and then the black line is reflecting the price of the stock. And you can see they've kind of tracked that blue line. They haven't really been down at this orange line here. Back in 2019, they got real close. PE of 16, 17, but they're not really down. I don't see them being on sale a ton. Like, if they get below the blue line here, it looks that would have been a better place to buy Texas Instrument from a price perspective. So on a 15-year history, we've got a normal PE ratio of 22. Right now they're at 31. So this is not a good place to buy Texas Instrument. This is not investment advice. This is just for educational purposes only. But yeah, this is not a quick look. If we see that from a dividend perspective, again, what we're looking for, even though they do have a good growth and they have a long history of a dividend, but this is not good. This payout ratio is not good. And then the price, they're not very cheap right now. So we would want to, of course, ideally be able to buy a stock on sale, right, at a much better price. Price is a big deal when it comes to buying a company. What you pay for it does matter. You can dramatically lower your risk and increase your chances of a return if you know what something is worth. So this is telling us that this is not cheap. And let's scroll down and just see. Fast graphs gives you a lot of information. So at the cash flow, again, cash flow is what we're looking at from a dividend perspective. We want cash flow to be growing and increasing, especially when it comes to paying that dividend. And so for 24, their cash flow has not really been that consistent. Here, 21, it was about the same. It looks like we dropped in 23. That was 22, 23. So 24 were lower. So that's why their payout ratio is high. Their cash has been dropping. And here, this is even negative. December 31st, 24. Let's switch this to 25. So Q1 of 2025, they were negative. Yeah, so their cash flow is not looking good right now. Their net investing cash flow is down a lot, and their net change in cash is down. So that's a quick look at Texas Instruments. So I guess what that tells us, so they are in the AI world as far as semiconductors. They're overpriced right now. Definitely not a good price as far as for a long-term investment. And their dividend, even though they have a really strong history of a dividend, their payout ratio is really high, and it looks like their cash has been down, and that kind of explains that. So I would just put this on a watch list, and I would, not be in a hurry to do anything with Texas Instrument at this point. So this is the kind of analysis we like doing and looking at here at Fish Creek. I'd love to help you look at your portfolio. Again, we're focusing on dividend growth. You can dramatically lower your risk and just know what to expect when you have a portfolio that makes sense to you and is mapped out with dividends and how that dividend is growing and what you can expect over the long term with cash flow, especially in retirement. So if that's of interest to you at all, I've got a link in the description below to where you can schedule a free consultation, and I can introduce you to our process here at Fish Creek Capital. Please click on that. I'd love to offer you that for free, and would love to help. Would love helping people make great investing decisions. Thank you for watching, and we'll be back tomorrow.